hold Bitcoin still?
Barely, which I know everybody hates, right? Barely. Not because I don't like Bitcoin or don't think it goes up. I just think it goes up less.
Yeah.
You know, we're looking at this as a technology and a network adoption model. So you want to back the network that's growing the fastest and has the most number of applications.
Yep.
That's the safest, easiest allocation. That happens to be ETH. Now, other earlier stage tokens, whether it's Solana or AVAX or whatever, are getting earlier on the adoption curve. So you get that accelerated phase. So they'll probably outperform. But if you're just thinking the safe, easy bet, we're now looking at the internet. The money of the internet is ETH currently. Nothing is exchanged in Bitcoin. Right. I mean, literally nothing. So the money of the internet is ETH. DeFi is built on ETH. NFTs are built on ETH. All of this is being built on ETH. ETH now has a yield. Yep. Stablecoins are on ETH. And ETH has a yield. Okay. What's left? Yes, it's not fast enough. So people go to other chains for that. It's a bit more expensive. People go to other chains. But the broad encompassing of the space, this is the simple, easiest bet to take.
Will you do other crypto allocations to the Solanas in smaller amounts to, potentially look at that 100x upside given where they are in the adoption curve? Or is there no point given the numbers we're talking about?
I just don't think I'm good enough, and I don't have the ability to spend all the time in the space. So that's one of the reasons I started the asset management firm, so I can allocate it to hedge funds whose job is that.
That's what we do.
So I do that.
Yeah.
But I do have a few bets. So I have a small basket of like DeFi, Uniswap and stuff like that, Aave, whatever. But I also have, the only other bet I'm taking really is Solana. So I've started to build a reasonable position in Solana because it has the next most number of developers, the network activity, and it's clear that their mission seems to be to use it as a blockchain for the masses. So, music, gaming, all of that kind of stuff. And I think the next phase is that. The next 200, 300 million people are going to come out of mass adoption and not from crypto heads like you and I who've been around for a while. And so I think Solana's a reasonable bet. Now, the chain breaks, it's not perfect, all of this stuff. Nothing's perfect, and that should be at the price. We all understand that.
Right. So actually, speaking of which, I'm actually visiting family in New York, so I'm going to go visit this new Solana store in a couple hours when we're done, and I want to segue this into a last discussion, kind of memes and the NFTization of everything. But before we do that, like, what brings all of this wondrous discussion on how we're all going to make money on this next cycle come crashing down and go horribly wrong? Do you think about like what that scenario might be that has a non-zero chance of happening?
Clearly, if inflation stays higher for longer and rates stay higher for longer, crypto won't recover. Does it go further and lower? Possibly, because we haven't tested it in that environment. So the macro is one. Obviously, there's always the threat of regulation, but they tend to be temporary in nature. We've seen China, we've seen India, we've seen everybody kind of toy around with different regulations. It moves the markets for short periods of time, and then money gets reallocated through the system. So I think the macro is probably the biggest risk. And because I don't see how the network by technologists is not adopted. The technology genie is out of the bottle, and that's not going away. So every time you trade below trend for an extended period of time, you're getting cheaper and cheaper and cheaper versus the log trend of adoption. So Metcalfe's law makes it very difficult for assets to stay down for a long time, which is why everyone gets frustrated with technology stocks, because they're not cyclical, because they're driven by the same factors.
My theory is that Bitcoin might have peaked at 80 to 100K if the China mining ban hadn't interrupted the network effects that were happening. Obviously, we'll never know, but it seems logical that we kind of crashed into a wall on those network effects, had to drive the big car around the wall by moving a whole bunch of stuff to the west, and that's all behind us now. At the same time, right, that the liquidity has troughed potentially, which could, again, it's just more potential fuel, all kind of coming together at
we
the
had
same
that
time.
double Wile E. Coyote moment at the top, and I didn't see it happening. One was the China ban, which I knew we could discount. The market fell and then rallied back up again, right? Because it moved the hash power elsewhere, blah, 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 it sorts itself out. But when we got back to the top, what we didn't realize is that discretionary spending had collapsed.
Right.
Because of inflation. So everybody had suddenly negative real wages. So they didn't have the $100 a month to put into Bitcoin because they had to pay their electricity bill.
I missed that 100% missed it. I mean, obviously it's always easy in hindsight, and it was kind of obvious in hindsight, but it'll be interesting thinking for myself about how I view that the next time it feels like they're going to have no choice but to put the brakes on quantitative easing. And are we going to accept the fact that liquidity is going to dry up again, or are we all going to be driving the rocket towards the cliff, assuming the rocket's going to keep,
Well, markets always do that. My guess is that volatility comes down as more people join the network. So therefore, each drawdown, as we're seeing, is less than the previous one.
Yeah.
So if it's 60% this time, what's it next time? 40%, let's say. So
that's why Apple talks about services in their earnings calls, because everybody has a smartphone now. So you have to move on at some point to the next thing,
Yeah.
All right. So I want to talk about NFTs, and I want to talk about memes, and I want to talk about all this craziness that I see every day on crypto Twitter. So I've seen several interviews on your Real Vision, and I've seen you talking, tweeting. Why are NFTs so important to you?
People don't yet realize what NFTs are. Everything we do in life, including me coming on this podcast today, is a contract. An NFT is a unique contract. Forget everything about what it's being used for currently. Almost everything we do, from derivatives in financial markets, through to insurance, through to attending a concert, through to education and getting a certificate or anything, they're all contracts. The technology now allows these contracts to be verified and all the stuff that we know with blockchain, right? So we've now created a global marketplace for contracts. But the first thing that came out of it was art, bizarrely enough.
Yeah.
Because this technology allows us to solve a number of issues about who gets paid for what. Right, a contract for a piece of art. I buy the piece of art from Damien Hirst directly, he gets paid once. Then after that, he never gets paid again because it's not linked to anybody. But the smart contract changes the entire equation, so he can he can participate in his own network, which he couldn't do before.
Yeah.
So NFTs are that. NFTs are another thing. It is the proof case of community and what it means to coalesce groups of like-minded people around single ideas. Whether that's the DAO structure of the Constellation DAO, the Constitution DAO, which didn't actually achieve its purpose, but it was an incredible getting together of capital, $46 million in like 3 days around one idea, or whether it's a shared idea in the IP, which is, let's say, Yuga Labs, Bored Ape Yacht Club ecosystem, which is, well, we're building a media company from scratch based around community from the ground up.